Real estate investment practice problem using Excel, part 1. Loan amortization schedule worksheet with no tables, part 1. Get ready because it's time to raise the stakes with real estate. Here is our Excel worksheet. If you have access to the Excel worksheet and would like to follow along, note that we have 3 tabs down below. We have the example tab, in essence being the answer key. We have the practice tab, which is basically a mid-range, gives an outline of what we will be doing, making it a little bit easier to go through and put together the practice problem. And then the blank tab, which is just a blank worksheet that we can put the practice problem together from nothing, from scratch. So we're going to practice here in the blank tab, putting this together from nothing, from scratch, because this can be useful as you take this kind of information and apply it to your personal circumstances, in which case you might want to set up the table slightly differently, and that's going to be one of the benefits of Excel. So we want to think about how we could set up these amortization schedules and then how you can take those and basically adjust them for your particular needs. First, let's take a look at the example tab. This is going to be the end result that we're going to be looking for. The typical way you want to set up these Excel worksheets is often to have a set component, such as the left-hand side here, which will have our data set. And that's going to be useful then for us to draw from, so that we can then build our tables on the right-hand side using the information on the left in such a way that we can then change the data on the left-hand side and have it then populate and change the amortization tables and our tables on the right automatically. And that allows us to have a worksheet to run different scenarios, so we could change things such as the home value, the percentage down payment, the dollar amount of the down payment, the loan amount, the years of or the term of the loan, the months of the loan, the rate. We could change those things and have them update our worksheet automatically. That's going to be the objective. Now, note on the right-hand side, we're going to have our amortization table. So these are going to be the months that we're going to have, the loan starting point, and then the amortization all the way down for 360 monthly payments, which seems quite tedious, but it's not too difficult to do in Excel. And then oftentimes we're going to want to be able to group our information a little bit more easily, possibly not on a monthly basis, possibly on a yearly basis. So we'll practice basically reformatting that data into just the 30 years and see if we can pick up this information on a yearly basis for the payments, for the total interest, and for the loan reduction, and then take a look at the loan balance. This will actually be a little bit more difficult because here we're not going to be using tables. So I'm not going to be inserting a table and doing any kind of slicer things to do that, or any kind of pivot tables, which can make things easier. Those tools, tables can. However, they can also complicate things. They kind of overwhelm people sometimes as well. So we will first do this with no tables, and then we'll go back in and say, okay, what if we use the tables functions? How would we structure this differently? That'll be another problem that we will work on and put it together in that format. So if you want to put tables in, then we'll do this again with a table format. But here, no tables. Okay, so we're going to do this on the blank tab. So I'm going to go all the way over to the blank tab and just format this thing from scratch, and we'll take a few presentations in order to do it. Normally, if I have a blank tab, I like to increase the size of it down here. It's at 100%. So I'm going to make it a little bit larger so you can see it and I can see it a little bit better, even though I got my glasses on and everything. So I'm at 160% here. Let's make it a little larger, 170. Then I will typically format the entire worksheet to whatever format I generally like to see the format in. And then we'll basically change any cell formatting to whatever we need for that particular cell, such as a percentage formatting or adding decimals. So to format the entire worksheet, you can hit this triangle up top. That'll select the entire worksheet. Then I'm going to right-click on this entire worksheet, the selected area, and I want to be going down to the formatting. So I'm going to go down to format the cells. I'm going to format all the cells because I got everything selected. And I usually like to go to currency personally. I like to have negative numbers red and or just bracketed. And then I remove the dollar sign. I don't need a dollar sign on everything. And then typically I'll remove oftentimes the pennies because they might not be relevant on this kind of problem when we're talking about big dollar amount items, and then add them back when they are relevant. That meaning the decimals. And that's usually the formatting. So I'm going to say, okay. So there we have it. And then the typical idea on the Excel worksheet, I'm going to put my data set on the right-hand side. Notice I made this cell a little bit larger putting my cursor in between A and B, left clicking, and then dragging to the right so I can put my descriptions in cell A a little bit more easily. And then I'm just going to put the normal kind of data information here that we could draw from when we make our amortization table. So that's going to include, let's say, the price. We're going to say, let's say it's a home we're purchasing, home price. I'm going to say it's $500,000. I also oftentimes like to make the whole thing emboldened instead of, so you could see it a little bit more. So I'm going to select the triangle again and go to the font group and make it all bold. I'll just make the entire thing bold. You may not like doing that because that doesn't let you bold specific things, but I think it's easier to see, especially in a presentation format. And then I got the down payment. I'm going to say down payment percent. Let's say we're going to put, and let's put the first number we'll say is 20% down. Now here I need a percent. I'm going to type it in as a decimal, 0.2. You can't see it because I typed it in as a decimal. If I go to the Home tab, Numbers, and add decimals, there's the 0.2 or 20%. And then if I percentify it, it'll move the decimal 2 places to the right and add the percent for the percentage field. So then we have the down payment in dollar amount. So dollar amount of the down payment. Notice it tries to populate the same thing. I hit the space bar twice because I don't want a percent this time. And this is simply going to be, well, if we're going to have the 500,000 times 20%, that means we're going to have a down payment of the 100,000. Now note here, this top item is usually something that we will be populating. I'm going to make this blue because that'll be something we'll populate. And then it'll automatically calculate the 20% to get down to the down payment of the 100,000. So that means the loan or the financing would then be the purchase price. It would be the home price minus the down payment. Home price minus the down payment. So, and we'll get into other kind of costs that might be involved later, but that'll be the general idea, right? We got the cost, the home, 500,000, 20% down, 100,000, loan, 400,000. So then we have the years. Now the standard loan is going to be 30 years, so we'll start off with the 30 years standard. And then we could say that the months, it's important to have the months because we're going to be breaking this out on a monthly basis. That's how many periods are going to be there. There's 12 months in each year, so I'm going to say this equals the 30-year times 12, and that'll give us the months of 360. That's how many periods that will be involved. We have the rate. Let's imagine the starting rate at 5%. This is another one we need to make it a percent. I'm first going to type it in as the decimal equivalent of 0.05. Put our cursor back on it. I'm in the Home tab, Number group, adding decimals. There's the 0.05. I want to make it a percent. Number group, percentify it, moves the decimal 2 places to the right, adds that percent for us. So there we have the general data. Now I'm gonna put the brackets around this, selecting this whole thing. Font group, we're going to put some brackets around this. I'm going to go to the borders, and I just like putting brackets around the whole thing, all border. So there we have it. And you might want to then make, say, blue the things that you're going to change as opposed to the things that you're not, meaning you might keep the 20% as kind of fixed, and that would mean you're going to change possibly the 500,000 home price, this then populating to get to the down payment. And then the loan amount will populate automatically by just having this amount in place. The term, you might then say that this could change because it might not be 30, it might be 15 years or something like that. This is going to automatically be calculated based on how many years the loan is, since we're talking about a mortgage and it's typically delineated in number of years, which we can then break out to the number of months because that's how the monthly payments are going to be working. And then the rate is going to be the 5%. You could look at a monthly rate as well, but I'm just going to keep it at 5% and use that as we do the calculations in Excel. Now, you could have a summary down here. The next thing you want is the payment. So the payment, PMT, this is usually the big function that we need to use in Excel to basically calculate the payment. So this is one of the first things we want to end up being able to do because we would like to be able to calculate the payment with different scenarios up top. So this is usually the first step to kind of using our projections to say, well, what if analysis. What if this happened? What if that happened? Now, there's a couple different ways you can do the payment. Notice that you do have the formulas up top. If you go to the Formulas tab and you want to use the Insert Function item, you can look for the payment, which is the PMT. Let's just call it PMT. I don't see it there, PMT. So there it is, the PMT. And if you do it this way, then it's a little bit easier, maybe, because it gives you this dialog box, which might give you a little bit more information. And you can also see how it will populate if you were simply to type it in. So we'll do it twice this time. And then later I'm going to use this dialog box less and less, because I think once you get the format of how to simply type it in, it's fairly easy to do. So we're going to say the rate. Now, the first thing is the rate's a bit tricky. We're going to try to pick up, remember, this information from our data set up top. So the rate is going to be that 5%, but that's the yearly rate. Now, remember, every time you're looking at these loans, the rate is going to be in years, even though you're making payments in months. We got to make sure that the rate calculation is matching the periods that we're going to be looking at, which are going to be in months. So that number needs to be divided by 12. So the yearly rate that we typically have, and notice they almost always give the yearly rate, because if they were to give a monthly rate, we don't usually think about monthly rates because they're very small oftentimes. You're going to get a rate that would be less than 1 at that, and that would be small rate, and it might not be even. So we'll take that and divide it out to get the monthly rate. And then we got the number of periods. Number of periods is not going to be 30 because we're not talking years. We're going to do this on a monthly basis. It's going to be 360 or 30 times 12. So this one was divided by 12, the rate. If we were to pick up the 30 years, we'd have to multiply it times 12 because those two things need to match, the period and the rate per period. The rate means, the rate per period. And then we've got the present value. The present value would be the loan amount, which isn't the home price, but the loan amount of the $400,000. So there's the $400,000. These two we do not need. We don't need the future value or the type. That's why they're not bolded. They're not required in this type of calculation. You can see that it gives you an amount down below. That amount is negative because that's typically how it's going to be. You could change that by putting a negative before the PV, but let's take a look at that first. We're going to say OK, and there we have it. Now, oftentimes we want to see the pennies here with this calculation, so I'm going to go up top, Home tab. We're going to go to the number group. We're going to add a couple pennies. So there's our decimals, and then I like to see it as a positive number instead of a negative number. So if I double click on this, I think the proper way to flip the sign is putting a negative before the present value here. But I like to do it by just putting a negative in front of the entire thing. So it's a negative number. I'm going to flip the sign in essence by multiplying it times a -1. So I'll put a negative in front, and that'll then flip the sign. That's what I will typically do. Now remember, when you're looking at these items, it might not be even. See, it doesn't round evenly to the pennies, but so you got to be aware that there are rounding. So if I go to the number group, add decimals, I'm aware that it's not exactly 2047.29, but there are added pennies. And when I use this calculation in other formulas and other calculations, it's actually using the actual amount, not the rounded amount to 0.29 pennies. So that's going to be that. And then we could calculate then just from this information the total payments, which is going to be, we could say, all right, well, the total payments are going to be equal to that payment times the 360 of them over the life of this thing. So total payments over 30 years would be the 773,023, and that would mean that the total interest would then be equal to the total payments we're going to make minus the loan, which was $400,000. So over the life of this thing, 30 years, we've got total interest we'd pay of the 373,023. I'm going to make these blue as well. I'm going to bluify this. And these, let's just put some brackets around these. These will kind of populate automatically. So it might look something like this. And again, you might use the blue areas a little bit differently in terms of your data input. If I was doing this for myself, I'd use the blue areas basically for things that I'm going to change the data in, and then the white areas for the things that I'm not going to change the data. Don't touch those. The cells will populate automatically. That's what I would indicate it. When I do the practice problems here, I often make the blue area everything that we're going to populate. So when you look at this practice problem, the blue area might just simply indicate that's where we're going to be doing our work, and the white areas are the areas that were outside the framework of our practice problem as we enter the data. So it's a slightly different use of the colors in that way. If I go now, we're going to continue on with the actual amortization table next time. I just want to make a comparison at this point and take a look at some online calculators. Now, I'm not trying to promote any particular online calculator, but you can use these as a tool, and they give you some good information. But remember, you don't have that kind of customization as you do when you put this in kind of like an Excel worksheet. So I would use the online calculators as basically a double check to check your work, and then basically put it in Excel. That's what I would typically do. But here's an online calculator, for example. If the loan amount was the $400,000, 30-year loan, 5% interest rate, APR monthly, every month is the standard period. And then I got to put something in for the loan fee. So I put a penny, and we'll talk more about these possibly in a future presentation, and a penny here, and calculate this out. Then we get to the amount financed. You get our summary data up top, the $400,000, the total payments to 2147.229, which matches what we got here, right? The 2147.29. And we then have the total payments to 773,023, 773,023. And then, so that looks good. And then we've got the total interest, the 373,023 on the interest. So the 373,023 on the interest. And some of them are quite nice. They give you this amortization table down here. And again, this is great that they give you these, but you can't quite take that data as easily and then put it into, other types of tables you're working with to add property taxes, or to add your tax impact effect that could be on this, or to say what's going to be the difference in the amount of deduction I might get for interest as years go by over this thing, as the interest goes down. So we'll talk more about that in the future. So these can be a good tool. Again, I think they're better to use for a check and try to put this information into an Excel worksheet that you can then adjust. And that's what we'll practice doing here. Here's just another one, just so you can get another look at it. This one, we put the home amount in, 500,000. I'm saying 20% down. So we're going to say, all right, 20% down. And so that means the loan amount would be the 400,000. We've got the rate at the 5% on the rate. It's the 30 years. So we're looking 30 year. I'm saying it's going to start on January 2022, and nothing in these items at this point. We might talk more about them later. And then if we were to calculate this thing, it gives us our nice little calculation. Once again, we get the amount of the 214729. So we've got the 214729 over here. That looks good. And then we have the 20% down and so on. And notice again, they got this nice amortization table that they calculate, which is useful, but I'd still like to put it basically in Excel and use this as basically a double check for it. So next time, we'll kind of populate this amortization schedule. So the next thing we'll take a look at, we got our data here. This is usually if you talk to someone about basically loans, and they're usually going to break the information down this way, which is the most simple way to see it. But notice that the interest and the principal and whatnot are going to change over the time period. So this payment amount isn't really the only thing you want to know. You kind of want to know what's going to happen from a year-to-year basis, and possibly use that to do any calculations for tax benefits and so on. So next time, if I look at our example tab on the left, we'll make our amortization table. And so that will be on a monthly basis. And then once we have that monthly detailed information, we might want to take that and then break it down, in essence, on a yearly basis. And then you got this information all nice and side by side, and you can then change your data input on the left-hand side and change these calculations automatically. Then in future presentations, we'll take that data and then try to do some comparisons on a side-by-side basis, because remember, it's nice that you can change this data here, but also you might want to see a side-by-side of the data as well. So we'll take a look at some different examples on how you might format your Excel worksheets in future presentations. Back to the blank cell. So we'll continue on creating our amortization schedule next time.